Hey everybody, Jack Luttge, Mortgage Advisor here, and welcome to episode 4 of Credit Basics. Today we're going to talk about credit repair. Now this class is for those of you that watched my last video and said, yeah, Jack, that's great if I was 5 years younger. Now things are already messed up. My credit's a mess. I need help. Well, I'm here to help. Let's get started. First thing, there are companies out there that can help you. There are credit repair companies and debt consolidation companies. Now, a credit repair company promises to fix your credit for a fee. They charge you a fee, either an upfront fee or a monthly fee, and they work on fixing your credit. The other type is debt consolidation businesses, which do consolidation loans, which basically means taking all those credit cards and collections and everything and putting them all into one loan with one easy to manage monthly payment. And also they can do debt settlement services, which is negotiating with the lenders to get more favorable terms on your loans. So those are some options there. Now, you do have to be careful with this. A lot of those credit repair companies are scams. Here are things to watch out for. If they promise to erase bad credit or remove negative information that's accurate from your credit report, that's a red flag. Remember, like I said in the last video, you can't just be like Shaggy and say it wasn't me. They need proof. And if that debt is legitimate, if that collection is legitimate, no credit repair company is going to get that removed. They may temporarily get it off, but it'll snap right back on there. It won't work, and you'll have paid all that money for nothing. Also, anyone that promises fast and easy credit repair. Credit repair is possible, but it's never fast and it's never easy. It takes work. Don't allow anyone to make a new identity for you. That's called fraud. And be careful if they want you to pay up front or will not tell you about your rights. These are all red flags that a credit repair company is actually a scam. Also, the debt consolidation companies and debt settlement companies. I would also caution you on using these until you've dealt with the root issue. So here's the thing. Let me tell you a story. Several years ago, I was a banker at a large bank here in St. Louis area. And I had a couple come into my office. It was a nice younger couple. They were both teachers in the local school district, and they had gotten themselves into trouble with their credit cards. They had racked up $20,000 in credit card debt. And we ended up doing a consolidation loan for them. And this was a great deal for them. The minimum payment on their credit cards was higher than the new debt consolidation payment, so they were saving money every month, and it was going to have all their credit cards gone in 5 years. It was a great deal, paying off $20,000 in credit cards in 5 years with one low monthly payment. It was fantastic. It was great. Well, the next year, 1 year later, this same couple was back in my office again and had racked up another $20,000 in credit card debt, and they still had their consolidation loan. That consolidation didn't help them at all because they hadn't dealt with the root issue. They had just slapped a Band-Aid on their poor money management, and it made their situation even worse. So make sure you have dealt with the root cause of your issue before you go into any kind of debt consolidation plan or anything like that. So, how do you pay down debt? There are two basic methods for paying down debt quickly and easily. There's the debt snowball method and the debt avalanche method. Now, the one thing, there's arguments out there on both sides. Some people like the avalanche method better, which is basically taking your debts from highest interest rate to lowest interest rate and paying off the higher interest ones first, which mathematically makes sense because you're bringing down the balance of the higher debts first. And then there's also the snowball method, which is listing your debts from smallest dollar amount to largest dollar amount and just focusing on paying off the little one, getting it gone, and then rolling that payment onto the next one, creating a snowball effect of your payment on that debt. Now, both of these are good strategies. I personally lean more towards the snowball method, especially if you've got some collections mixed in there, because if you're using the avalanche method, collections don't really count because you don't pay interest on collections. So they would be dead last. And if you're looking to repair credit, you really need to take care of those collections. Which brings me to the next section, collections. Yep, everybody loves collections. I remember when I was a kid, my dad had some debt collectors that would call our house. And I was told as a child, back in the 90s when we had house phones, the phone would ring and I would answer it. And if they couldn't pronounce our last name, we said, nope, never heard of him, and hung up. That's how we dealt with debt collectors. That's now how I'm recommending you deal with debt collectors. Here's what you do with the collections on your credit report. So first, you go through the steps we already talked about. You get your credit report from annualcreditreport.com. You go through those collections, find out which ones of them are legitimate. Have any of them already been paid? If they're medical, was insurance supposed to pay for it? Or anything like that, and dispute those items and get them taken care of that way. For those that are left, are they close to the 7-year rule? Remember we talked about the 7-year rule before, 7.5 years, whatever. If they are close to that, maybe just wait them out. And then lastly, medical collections specifically are treated differently by most mortgage lenders and most mortgage programs. So you really want to focus on those last. Like you still want to take care of those. And I know it's so tempting, especially if you're in the snowball, because sometimes those medical collections are like $50 or $100 or whatever. But if we're going to try to laser focus in getting our credit as good as possible, as quick as possible, you really want to follow this program. So save the medical collections for last. Focus on other stuff first. Old utility bills, unpaid credit cards, things like that. Those are the ones you want to attack first. So now that you've isolated which collection you want to tackle, move to the next phase, negotiating. You've got to call them and negotiate and figure out how to get this taken care of. The first thing you want to do is see if they'll settle for less. A lot of times they will. If you're not on a payment plan, let's say your collection was for $1,000. Well, call them up and see if they'd take $500 and call it good. They might. But there's a catch. Getting that isn't actually your main objective. You're trying to build credit. So you need to get that collection removed from your credit report. Paying the collection does not, hear me, paying the collection does not necessarily remove it from your credit report. In fact, most of the time it doesn't. What they do is they just update that collection to say that it was paid, which is great. You've now paid that collection, but you still had one in the first place, and it's still going to drag your credit score down. But they have the capability of removing that collection from your credit report altogether, of deleting it. And I know they can do this. They all have this capability. Don't let them tell you that they can't. Don't send them any money until they agree that they will. And that's the next part. Get it in writing before you pay. So in order here, first, see if they'll take less, but make sure they're going to delete that collection from your credit report altogether and get it in writing before you send them any money at all. Get it in writing. I'm also going to put a link in the description of this video below here to a document that is an excellent template for this. You can read it to them on the phone and require them to agree to it, or you can send it to them in an email or a certified mail or whatever you want to do. But you want to do this first before you send them any money. You've got to get their commitment and agreement in writing that they're going to delete that collection from your credit report. That's the goal. And I would say if you're looking to fix your credit, you really got to decide sometimes. Sometimes they'll do one or the other. Sometimes they'll settle for less, but they won't delete it from your credit. They'll only delete it from your credit if it's the full balance. If that's the case, wait a little longer, save up the rest, and pay off the full balance. That will be the best thing to do to get it removed from your credit, to get you in the best financial position possible in the future. All right, that's it. We've talked a lot. This is the end of the video series. You now know how credit scores and reports work, how they affect you, how to get your credit report, how to review it for accuracy, how to dispute errors, and how to pay down debt and get rid of collections. You are now on the road to building, maintaining, and repairing your credit. Good luck, guys. We'll see you next time.